This is actually the worksheet that I put together originally to get the small business loan that I have now. And so just a couple of words about loans for small businesses, and then I'll show you how this works on the call today. It's really hard to get a loan as a small business. Like if you go to Chase or Wells Fargo or Citibank or Bank of America, they're just going to laugh and say, go away, which is ridiculous because they have a bunch of money and you could really use the money, but they just don't risk their money on small businesses. But there's a program called the Community Development Financial Institution Program. I've mentioned it a little bit before. The federal government guarantees 75% of the loan money that the institution gives you. So if you go bankrupt and you don't pay it back, they only lose 25% of what they loan you. The government will reimburse them for the other 75. It's a very specific designation you have to apply for with the federal government. They try to have a certain number of them in each area, but not too many. So we have 3 in our area right now. One of them is called Access Plus. They're actually based out of Fresno, but this is the spreadsheet from them. It's the one I'm most familiar with. Valley Strong, which is actually the one I got my loan through. Valley Strong is still in the process of getting approved as a CDFI. So I actually ended up getting my loan under more stringent regulations just because I like Valley Strong and like Access Plus was busy. They didn't, can you call me back to them? If they had called me back before Valley Strong had, I might have gone with them instead. And then Alta One. Alta One is also a CDFI around here. Okay. So basically, if you're going to apply for a small business loan with a CDFI, this is basically the information that you need to provide to them. And one of the assignments for this class is to fill this spreadsheet out together with the client. So here we go. So we'll see there's various tabs here: home, structure, worksheet, collateral, amortization, business debt, TA plan. TA plan, forget about it. That's actually just notes that Access Plus makes to themselves. Got to put the business name in here. Got to say what you're going to use the money for. So you can see in my case, I wanted to hire some part-time employees and expand marketing. You got to at least put where the business is. You got to give them some idea of how many jobs you expect to create. I mean, this program exists because it's trying to help small businesses grow, which is going to create jobs and grow the economy. So you're usually going to have to tell them how much, what's the impact you're going to make in the economy. You got to tell them how much you want. This interest rate here is relatively fixed. It's what CDFIs charge. It's higher than a normal loan because they're taking on more risk, but you know, a credit card's like 16 or 20%. 8.25 for a $100,000 loan is pretty damn good if you're a small business without the established track record. So, a little bit about the mission, and that's it. Structure. You got to tell them what you want to use the money for. So, in my case, 75,000 of it was for salaries, 25,000 of it was from marketing. That's it. Pretty simple. If it doesn't fit into one of these categories, you can add a line to say what it's used for. This worksheet is the most important part. So you got to put in here your personal income. Oh, so this is basically, this comes right out of your like federal 1040 tax form. These all come out of federal forms. This is all basically copying and pasting from various boxes in your tax return. Okay. Down here, you're basically summarizing the taxes that you pay. And you're putting in yeah, so up to here is taxes. These last three items here, super important. How much do you pay for rent each month? What are your other living expenses? So if you like look at everything you have to pay for each month, going to the grocery store, like paying for subscriptions on your phone, TV, etc. What's the total amount that you have to spend, like, for the year? And if you owe alimony or child support, you gotta put that here. If you basically take everything from here and then subtract all this, that's what's left over for what's called free cash flows. And that basically means that after you pay all your bills and your taxes and everything, that's how much money you have left over for the year. And a CDFI will more or less loan you as much money as you can afford to pay back. So the annual payment, so if you add up the monthly payments for the loan, it can't be more than $16,000 a year. Because that's all the money I have extra left over in order to pay the loan payments. Now, a regular bank would make a much higher requirement, but basically with the CDFI, the punchline is whatever money you have left over after you've accounted for all of your various expenses, they will loan you the amount of money that will cover the payments for. Does that make sense? And then there's also down here, before I forget, this is your personal stuff. So I took, my small business was just getting off the ground, so I had no track record. I had no, well, you can see here, this is business cash flow. So I lost 17,000 this year, the first year, lost 5,000 the second year, made 2,000 the third year, but that's not very much of a track record. And I don't have any like assets to speak of, or additional revenues left over to be able to justify the loan payments as a business. So I'm taking them on personally. If the business has a lot of profit at the end of the year and has some track record, then you can borrow the money as the business rather than as the person. But you can also borrow it as a person for the business. Make sense? Okay, so you'll see here, this is where you put how much money you made or lost with the business. And then way down here at the bottom, you've got, actually I forgot, go up here to the top. You also need to put down any loans you already have to pay monthly on, any revolving debt like credit cards, and you got to put in mortgage payments. So if you have a mortgage, then you're obviously going to probably put 0 for rent. And if you rent and you don't have a mortgage, then you put 0 here. I actually just bought a house last year, so now I have to, if I fill this out again, I need to change from rent, which is now 0, to mortgage, which is 3,000. Ouch. So basically, you'll see down here at the bottom, total proposed debt. Like, let's go to the current year, actually. So I applied for this in 2023. So you can see here, total proposed debt, 14,000 annually worth of payments. Business debt coverage, like basically 0.17, that means like the 2,500 that I have here could only cover 17% of that 14,000. But personal, I got 3 times as much money as I got 46,000 personally, or actually you subtract the 2,500, about 4,300, 43,900. So I got 3 times as much money there. That's fine. So now they say yes, and then the next thing, if they say yes and you're on the borderline, you can actually tell them various types of collateral that you have. Not necessarily all the time. Here's the other key tab that I want to show you guys before we call it a day. So in this sheet right here, you can basically manipulate the loan amount and you can manipulate the period of the loan, okay? So most CDFIs will, you can say right here, anywhere between 1 and 30 years, okay? And it'll tell you a monthly payment. So if I want to borrow $100,000 and pay it off over 10 years, I'm going to pay $1,200 a month. Okay, which adds up to about $14,000 a year, which is what's in the other spreadsheet. If I want to pay it over 30 years, oh, sorry, gotta enable editing. If I decide, you know what, I can't make $1,200 a month, that's too much. I can pay it over 30 years, $750 a month. But look here, total interest, $118,000. So I'm going to end up paying more than $100,000 in order to borrow $100,000. So, like, I borrow $100,000, I give them the 100 back plus another 118 in interest. That's a lot of interest. So, if I borrow it over 1 year, okay, I got to pay $8,000 a month. But I'm only paying $4,000 extra by the end of the year. Make sense? So basically, the longer the term of the loan, the more money you're blowing on interest, but the lower your monthly payment. So you can basically use this spreadsheet right here to figure out how much can you borrow. As long as you change this number and this number and get a number right here under monthly payment that is less than the amount of extra money you have left over each month, that's what you can borrow. The rest of it is all paperwork. The really important thing to understand about what you could potentially qualify for as a CDFI loan is what is this number after you manipulate these. So how high can you make how high can you make the loan, and how far out can you make the loan period in order to get to the payment number you need?